Welcome to Tech Talk. In this video, we will talk about why Bitcoin miners are exiting China and moving to US. Subscribe to the channel and click on the bell icon for more news on cryptocurrency. Jiang became a multimillionaire a few years ago by operating some of the most lucrative mines in China. His commodity? Bitcoin. Jiang had about 300,000 computers humming around the clock in 20 specially ventilated warehouses across remote northern China, guzzling enough electricity to power a small city. The sophisticated machines cost hundreds of millions of dollars. The digital currency they minted was worth even more. Today, Jiang, a fast-talking 36-year-old, is winding down in China. He and several Chinese investors, some who became billionaires off Bitcoin mining, are considering shipping their equipment to Texas and Tennessee. China's Bitcoin moguls are coming to America. For years, Chinese miners like Jiang were enabled by the glut of cheap, and often dirty, electricity in China, where a massive fleet of coal-fired plants and hydroelectric dams fueled the country's rise into an industrial behemoth. At their height in 2018, China's Bitcoin prospectors accounted for 74% of the world's Bitcoin production. But this year, Chinese authorities are cracking down on cryptocurrency to dial back energy consumption and meet their climate goals, sending miners scattering. And increasingly, miners are decamping for places like Texas, South Dakota or Canada, launching a mass migration with implications for the evolving industry and the new communities that will house it. There also are questions about how much local energy grids can handle. Digital currencies need a huge amount of computing power for transactions and other functions such as creating new cryptocurrency supplies. That draws a lot of energy, often measured by the gigawatt, or 1 billion watts, to keep the systems running. The more a cryptocurrency system grows, the more electricity it requires. Jiang recently pulled tens of thousands of his machines out of Chinese regions including Inner Mongolia, which has not only banned mining but encouraged citizens to call a government office to report illicit mining. You know they're getting serious when they set up snitching hotlines, Jiang said. Elsewhere in China, the Xinjiang region and three major provinces, Qinghai, Yunnan, and Sichuan, have also banned cryptocurrency production. On May 21, top economic officials in Beijing pledged to crack down on Bitcoin mining and trading, an announcement that sent the worldwide price of Bitcoin plummeting. In recent weeks, Chinese social media users have complained that some crypto topics were being censored, while Chinese police have announced the arrests of more than 1,000 people in cryptocurrency-related financial crimes. That sudden chill, Chinese Bitcoin miners and executives predict, will only deepen. The Chinese government has appeared uneasy not only about the industry's carbon footprint but also the intrinsically uncontrollable, decentralized nature of cryptocurrency. Yemu Xu, the co-founder of Bella Protocol, a cryptocurrency banking service provider, said Chinese miners who see the writing on the wall have been trying for years to migrate to countries such as Iran and Kazakhstan to cut costs. In the past year, interest has grown in countries that have not only cheap power but also stable political regimes, mature regulation, and better policy support. But the arrival of industrial-scale mining in U.S. communities could raise the same thorny questions about the technology's environmental impact that have vexed officials in China. Researchers at the Chinese Academy of Social Sciences this year predicted China's Bitcoin mining industry by 2024 could consume more energy than Italy. University of Cambridge researchers estimated that Bitcoin miners globally accounted for more energy use than Argentina. Alex DeVries, a financial economist who has long criticized Bitcoin's energy consumption, predicted the migration of China's Bitcoin miners will have repercussions. Earlier this year, a dispute erupted in New York State's Finger Lakes region between local activists and a Connecticut private equity firm that had converted an old natural gas-fueled power plant into a Bitcoin mine. As a result, the New York State legislature is considering a bill that would block new Bitcoin mining and carbon-producing power plants. Other jurisdictions have taken the opposite tack. In March, coal-rich Kentucky passed a law offering tax breaks to mining operations that invest $1 million in installing new machines in the state. Either way, the growth in the U.S. cryptocurrency mining industry is expected to continue as larger investment funds are drawn in, especially if Bitcoin can return to its near all-time highs above $60,000, industry insiders say. Jiang ticked off a number of disadvantages to expanding in the United States: too many environmentalists who worry about wildlife and the birds, he said, and too much white liberal idiocy preoccupied with climate change, the science of which he has doubted. U.S. electricity was 6 times more expensive than in China, he estimated, and he would have to pay relatively high wages to IT staff to keep his computers purring. Even so, Jiang said he was considering 2 sites in Texas and Tennessee. It seemed less risky than other places, including the Middle East, where he had operations shut down by authorities, or Russia, where his colleagues' expensive computers have been seized by corrupt police. Hope you liked the video. Stay tuned for more updates. Do like and share the video, and subscribe to the channel to motivate us.